The Bitcoin market is facing intense pressure today, with volatility running high and traders on edge. Over the past week, BTC has slipped more than 10% from recent highs, now hovering below the $110,000 mark. This sharp decline has triggered cascading liquidations across the market, impacting both retail investors and institutional traders. Many leveraged positions were wiped out in a matter of hours, highlighting just how sensitive the market is to short-term movements. In total, over $1.5 billion in leveraged positions have been liquidated this week alone. With long positions bearing the brunt of the losses, the aggressive sell-off has pushed sentiment sharply into bearish territory, creating panic among short-term traders. Meanwhile, long-term holders appear relatively unfazed, maintaining their positions and providing a degree of stability in an otherwise turbulent market. Institutional activity, particularly around Bitcoin ETFs, has also shifted. What was once a bullish catalyst, steady inflows into ETFs, is now showing net outflows, putting additional downward pressure on prices. Miner activity is also contributing to the selling pressure, as miners take profits or cover operational costs, increasing the overall supply in the market and amplifying the downward momentum. Macro factors are compounding the pressure. The US dollar index remains near key support levels, and Treasury yields are climbing once again, creating headwinds for risk assets, including Bitcoin. This combination of technical, institutional, and macro factors has traders on high alert, as short-term swings are becoming increasingly pronounced. For those watching critical price levels, support around $107,000 and $105,000 is likely to be closely monitored as potential safety zones. On the upside, resistance between $112,000 and $113,000 will be a key level to watch. Breaking above, it could trigger renewed buying momentum and shift the market sentiment back toward the bulls. Looking ahead, October could be an important month for Bitcoin. Historically, seasonal trends have sometimes fueled recovery rallies, particularly if ETF flows stabilize and risk appetite returns to the market. That said, the current environment calls for caution. Traders should be prepared for volatility, unexpected swings, and sudden liquidations, as the market continues to balance between bearish pressure and potential bullish catalysts. And in summary, Bitcoin is at a critical juncture. Short-term traders are under pressure, long-term holders are steady, and the next big move could be triggered by a combination of macro developments, institutional flows, or technical breakouts. Staying informed, vigilant, and ready to react is essential in navigating this turbulent phase of the market.